name is Tobias. I'm EPRA's Director of Public Affairs. Today's webinar is presented in collaboration with Deloitte Belgium, and together we will provide some expertise on the Corporate Sustainability Reporting Directive. We will start with EPRA's work done on the CSRD provided by Jana Boer, EPRA's ESG Policy and Advocacy Manager, and then followed by our cherished colleague from the European Commission, Giulia Buttazzi, from DG FISMA, who will be so kind to share the political context and background on the CSRD. After that, Deloitte's Renoir de Klerk and Oriane Lambert will guide you through the new sustainability reporting requirements and the timing for listed property companies, which is then followed by a session where you can raise your questions. After that, we will launch a CSRD scope assessment tool freshly developed in-house by EPRA, which will provide interested companies with just a few clicks, if and by when they might fall under this new directive. And this tool, by the way, will also include assessment of EU subsidiaries of all listed property companies outside EU jurisdictions, just like the US or the UK. And all this in just 90 minutes, so stay tuned. So let's start with a few words on the background of this new directive. And as a reminder, this webinar is recorded, and you have the option to submit questions via the Zoom Q&A window during the whole session. So as we all have learned, the EU aims to be a global frontrunner on all aspects of the sustainability transition. And as part of this, it has kicked off a massive overhaul of non-financial reporting rules. So basically, the CSRD is one cornerstone of the European Union's plan to ensure that sustainability is incorporated into corporate governance law. It actually forms the backbone of the famous EU Sustainable Finance Framework, together with two other initiatives. And these two other initiatives are first, the EU taxonomy, on which EPRA gave a webinar earlier this month. So feel free to ask us for the recorded webinar. And based on that EU taxonomy, the SFDR, the Sustainable Finance Disclosure Regulation, with specific disclosures on ESG data for financial firms, where EPRA is providing another webinar in November. So the CSRD is the completing piece here and will bring nothing short than a new era in corporate sustainability reporting. The timeline for implementing these new requirements is tight, to say the least. So we will get into more details in a couple of minutes. And the scope is impressive as well, with all large and listed property companies expected to fall under the scope of these new requirements. The Commission actually states on its own website that the scope would expand from approximately 11,000 entities under the right now applied directive, which is called NFRD, Non-Financial Reporting Directive, which in simple terms is the predecessor of what we will have now, the CSRD. And with the CSRD, it will be 49,000 entities, so more than quadrupling. So in a nutshell, it's a decisive piece of legislation to which the EPRA Public Affairs team was also involved in the legislative process to raise the needs of the listed sector in Europe. And yeah, with that, I'm handing over to Jana Boer to explain more what EPRA's and our members' stance has been so far. Thank you.
Thank you very much, Tobias, for the welcome note and for the introduction. Good morning to all. Before we move indeed to Giulia's introduction and background explaining of the CSRD, I will briefly try to elaborate on why it's so important to EPRA members and to the listed real estate sector, and why indeed we are having this webinar today. EPRA mission is to promote, develop, and represent the European listed real estate sector. You know it all by heart at this moment. There are many ways to do that, and one of the ways is to lead on transparency. This is also what EPRA is dedicated to and committed to. It is the 11th year of sustainability reporting for the sector due to EPRA sustainability best practice recommendations, which has been put together by our colleagues in the sustainability department, together with the EPRA Sustainability Committee, with 28 sector-specific KPIs on ESG. If you can see on the slide, there are 77 companies which won this year the gold medal. On this slide, you can see the nice evolution of the sustainability reporting amongst the membership, also due to EPRA SBPR. In fact, 65% of the 167 assessed companies achieved an award this year, and it represents 75% by market capitalization. So it really does demonstrate the continuous improvements of the company's efforts on transparency and comparability for ESG data. And I need to say that because of our commitment and dedication to the transparency and sustainable reporting, the European Commission's Action Plan on Sustainable Finance was a high priority to our Public Affairs Department, and its strengthening of sustainability disclosure was considered to be a key action besides the two actions that Tobias already mentioned on the EU taxonomy and SFDR. I will now quickly explain what particular in a CSRD proposal were important to the listed real estate sector. And I want to start by saying that we are very pleased when we saw the proposal of the Commission that the business and investment community in the listed real estate sector had the same objective with the policymakers. EPRA worked very hard to bring the companies and more companies on the journey to provide ESG information while improving the quality of disclosures. And this is what we have in common. We are very dedicated to the topic. However, we also warn against extending the scope of the CSRD by imposing new requirements too rapidly and to increase the scope immediately to capture all SMEs, which didn't happen. And we are very, very grateful for the scope increase that is going to be gradual. We also supported alignment of the CSRD with TCFD and the EU taxonomy. We suggested to consider slight differences in objectives between the three initiatives and preserve the concept of materiality. From our experience, and this is what I would like to stress, majority of the companies have their data verified as they are seen more reliable by the investment community, and this reliability of the sustainability information is as important as the existence of such a disclosure. It was therefore our view as well that the limited assurance should be uniformly required by all companies, and the fourth recommendations which we had was introduction of sectorial focus within the standard development. As to us, it is important in increasing the data comparability. Most of EPRA members, and I know you would know, would not meet at the moment the minimum 500 employees threshold for the current non-financial reporting directive. Yet they would disclose their sustainability information on a voluntary basis, and they would do so because they are being equipped by the EPRA sustainability standard, and they are assisted by EPRA sustainability team to apply this standard and to produce sustainability reports. That's why we think that particularly the focus on sectorial implications within the standard will be very important, and I wanted to stress that today. And the last point is, of course, that EPRA is dedicated to raise awareness of the sustainability best practice recommendations, to communicate it with policymakers, to standard setters, to their technical advisors, such as EFRAG, to explain the role it had and the impact it had on the market and on the quality of the sustainability reports, which we can see now within our memberships. And this is a brief introduction, which I also wanted to give, and I would like to welcome Julia to join us today and hand over the part to her. Thank you. Julia, I think you're muted.
Sorry, I was double muted.
Perfect. Now
we
can hear you.
Thank you, Jana. And I said good morning, everyone. Thanks for the invite, and I'm very happy to be here and be able to underline how important it is corporate reporting in the area of sustainability, and more in general, give you a bit of a background as to why a revision of the existing regime was really necessary. Before I start, I would like to just mention that the CSRD text was subject to the agreement of the co-legislators in June this year. Right now, it's been double-checked and triple-checked by the lawyer linguists, and the scheduled signature would be for the end of this year, December. That means that then after that, it will be published on the official journal and enter into force. And from that date, the 18 months for the member states for the transposition will start. So I would now start with the presentation. Next slide, please. So when we speak of the existing regime, we speak of, as Tobias mentioned already, the Non-Financial Reporting Directive, the NFRD. It was introduced in 2014. It is an amendment to the Accounting Directive, and it introduced a requirement for some companies, namely the large public interest entities with more than 500 employees, and the PIEs that are also parent companies of large groups. By way of clarity, PIEs, we mean basically listed companies, banks, and insurance, with a new requirement to disclose certain information related to non-financial aspects, and in particular regarding 4 issues: environment, social and employee, human rights, anti-bribery, and corruption. This information needs to be included in the management report or in a separate report. It is not subject to an audit, so it means that it has to be verified that the information is there, but it's not going to be checked on the substance unless required by the member state. But of course, we're speaking of EU law in this context. There are no specific requirements on how to disclose. This situation, when a company has started disclosing information, we have identified shortcomings in the existing regime, and this is basically what the CSRD intends to address. Next slide, please. The situation of the existing regime basically generates issues both on the side of the preparers and on the side of the users. So when we speak of preparers, we see issues because the company doesn't know exactly what has to be disclosed, because the requirements are not sufficiently detailed. There have been guidelines issued, but as you all know, these are non-binding, and except for the case of the climate ones, the other ones are not detailed enough. And that creates uncertainty, and the fact that companies do not manage to get enough information from own suppliers and clients, that also generates cost and administrative burden. And this from the side of the preparers. If we move to the side of the users, we have even greater problems, because due to the fact of this uncertainty in the existing regime, some companies do not report all the information that users consider relevant. And that is one aspect. And some information is simply not reported at all. And the fact also that there are no rules, no harmonized rules on how to present the information and exactly what to include in the non-financial statement, that creates an issue with comparability, because information is useful, especially if the users can compare it. And that creates also an obstacle to the analysis and the readability of the information. One other aspect that is problematic is the fact that the information, as I said before, is not being checked on the substance, unless, of course, a member state decides to introduce rules in that sense. And that, of course, jeopardizes the reliability of the information. Information can be perceived as not reliable because it has not been through a certification, let's call it like that. Also, the fact that this type of information is not digitalized, there are no requirements for that at the moment, create an obstacle to, well, the facilitation of analysis and searchability that would be an advantage when the machine can read directly the information and retrieve the information for the user, facilitating the analysis. All of these issues create bigger problems when it comes to the lack of information that the users faces, which leads to investment decisions that are not, well, decisions that are not necessarily informed decision or fully informed decisions, and that by consequence could lead to systemic risk to financial statement. Also, limited capital flows to sustainable companies, and also, and not less important, the fact that the companies are less accountable. The problem with this situation is that if we leave it like this, what we have assessed is that it would just become worse. The cost would become higher, and it would just become more problematic for users because there is an increasing need for sustainability information. Next slide, please. Basically, so when we are in a situation of non-perfection, what we want to achieve is going towards an improvement of the situation. And basically, besides being one building block of the European Green Deal, the CSRD, I mean, the revision of the NFRD, as it was mentioned before, it is also an important aspect of the sustainable finance legal framework. Indeed, it is very much linked with taxonomy regulation and SFDR, because they're all part of what constitutes the pillar of sustainability reporting, basically. And it is also necessary it was necessary to proceed with the revision, also to ensure consistency with the other legal acts of the European Union in the field of sustainability. This would basically reduce the systemic risk to the financial system, facilitate the flow of capital to companies that are actually sustainable and addressing sustainability crisis, solve the issue or go in that direction of solving the issue of accountability for their companies' impacts on the environment and people, and reduce the cost more than simplify the reporting aspects. All this would be achieved by ensuring relevant, comparable, and reliable sustainability information. I would like to now go to the slide that would give you an overview of what are basically the key elements of this new piece of legislation that amends the Accounting Directive, the Transparency Directive, the Audit Directive, and the Audit Regulation. These are, let's say that they're not all of the elements. I understand we will go into more details later with the next presentation, but these are basically the key aspects. First of all, the application scope is been extended. It means that it was now the reporting obligations are for all large companies and also all listed companies, including SMEs, excluding micro companies, and this is a way to ensure that the information of a wider range of companies is captured and published and give access to it to users. I would like to underline that it's not all at once. So there are different dates of application for the different companies, depending on the category. So we have first in line, basically, what are today's NFRD companies that will be required to report from a financial year 2024 with publication in 2025, followed by other large undertakings, and then listed SMEs from financial year 2026 with publication in 2027. It is important to underline that for listed SMEs, the CSRD includes several, let's say, proportionate rules, more proportionate rules. The first one, I've just said it, they're going to start reporting later than other companies. They will also have a 2-year opt-out possibility, meaning that they will be able to not to proceed with sustainability reporting, though providing an explanation, some sort of clarification on the reason. But that will be a possibility as well. And they will also have to comply with European sustainability reporting standards that are specific for SMEs, meaning a bit reduced compared to the ESRS, let's call them full, that will be the ones applying to the bigger companies. And to end, there is an aspect that I would like to underline. Because of the amendment to the Transparency Directive, also all listed companies in the EU-regulated markets are covered, meaning also third country entities, third country companies that are listed on the EU market are automatically covered. And for them, the dates would be exactly the same, the ones that I said right now, depending on the category. So it will be 2024, 2025, and 2026. And the last category that is captured in the scope, it's the third country entities with a net turnover above 150 million that have business in the EU, subsidiaries and branches above a certain threshold. And for those, there will also be specific standards for the provision of sustainability reporting. In general, NFRD reporting requirements have been strengthened, meaning that the legislation is a bit more accurate on what has to be disclosed, but the substance and the presentation rules will be included in the European Sustainability Reporting Standards, the ESRS, the blue circle. We will have several, it's not just one set. Maybe we can proceed to the next slide and the following, please, so that I can give you an overview a bit of the ESRS that will come. There will be a first set of ESRS that are cross-cutting, considering cross-cutting standards and standards for all ESG topics, with adoption by 30 June 2023. And another set of standards that will be sector-specific standards, still part of ESRS full, but adopted by 30 June 2024. And then ESRS for SMEs and ESRS for certain non-EU companies. I would like to go back to the previous slide, if possible, the one before again. Thank you. Thank you very much. The last two aspects that are crucial in this new legislation concern the fact that the sustainability reporting will be included in a dedicated section of the management report. And this management report will have to be digitalized, meaning that the CSRD refers to the European single electronic format as a reference for the electronic format to be used. Right now, the SF, European Single Electronic Format Delegated Act, only regulates the annual financial reports and the tagging of the financial statement. Going in that direction means that there will come also a digital taxonomy for the management report, because so far the only rule that entities would be able to apply is to prepare this management report in the XHTML format, but there are still no rules on the digital tagging of the information within. They will come later. Last but not least, the assurance of sustainability reporting. For the moment, it will be limited assurance. So there will be a limited amount of tasks and checks that will have to be carried out. But the CSRD already includes a reference to an empowerment for the Commission to proceed with reasonable assurance. So one step further, much closer to what we already have for the financial statements, which is the final objective. But this will be subject, the conditions For this to happen is that there will have to be an assessment of feasibility, that this is actually possible. I mean, the reasonable assurance, the feasibility as regards the companies, the preparers, but also the persons that will have to carry out the reasonable assurance, meaning either the auditors or the independent assurance providers. One last thing that I would like to mention, and we can move to the next slide. I spoke about ESRS. ESRS, the next slide, please. And I think the one after. Yes, sorry for going up and down. Yes, I wanted to underline that the ESRS are being developed by EPRA. It's the independent expert that is in charge of carrying out this task. They have already shared with the public a first draft for the first set of standards, the cross-cutting and the ESG ones. Between May and August, there was a public consultation. Now they are revising their drafts and working really hard. They aim to submit to the Commission the final version in November. After that, the Commission, based on the text of the CSRD, will have to take this product and consult and do many consultations. There will be several EU bodies that will have to be consulted, also internally in the Commission, but also a public consultation of 4 weeks on the Better Regulation portal. This will be required, and it will be before, of course, the adoption. The deadline for adoption of the first set is set for June 2023, and it will be followed by an objection period for the Parliament and the Council, of course. To be underlined, and then I conclude, the development of ESRS, the CSRD sets out some conditions and some principles that have to be respected when developing ESRS, and some of them, the main ones, are the fact that they have to take into account EU legislation and EU initiatives, but also the global standard setting initiatives, meet quality criteria, and cover detailed ESG topics, basically meaning that they have to be allow for the preparers to publish all the information that is necessary, in particular for the financial market participants that have to comply with SFDR. I will conclude now, and I'm of course open to questions in case there are any. Thank you.
Thank you very much, Julia, for your speech and presentation. Indeed, I want to remind the audience that you can ask questions, you can put them in chat, and Julia will stay with us for the Q&A session, which will be after Deloitte's presentation. Right now, I would like to invite Renaud and Oriane to take over. The word is yours. Thank you.
Hi, everybody. Thank you very much, Jana. Also, thank you very much for giving us the floor today. So, as already explained by Julia, we will go a bit further in an explanation of the CSRD and what are the reporting requirements. We are focusing on reporting requirements in the presentation, but I do want to emphasize that, of course, reporting is the end result. You can only report if you have a very clear strategy which is implemented and operational, and at the end you can report in line with the requirements in view of the CSRD. So when Oriane and myself will be explaining, going through what is the requirements, try to make the reflection to your day-to-day operations, to your job, and reflect, okay, how ready are we now? How ready are our systems ready? How ready is our data available or isn't available? And when you have questions on this, don't hesitate to pop them up in the chat, and then at the end we will try to reply to them. Jana, if we take the next slide. So what we will quickly do, we will quickly make the link to the EU Green Deal, CSRD, a bit of a repetition of what Julia already said about when, who, why, who is in scope. We will also provide some more context on the reporting requirements, the assurance requirements, And then at the end, we will conclude with how to get ready and some key takeaways. And now I would like to give the floor to Arjan for the first part of our presentation.
Thank you, Reinhard. So indeed, I first want to take a little step back to understand where all this legislation comes from. In the recent years, a wave of initiatives have been launched at European level, and the most important one is actually the European Green Deal. The EU Green Deal has put forward a series of objectives to become carbon neutral, but of course, this needs to be financed. And for this, the EU launched the EU Action Plan to Finance Transition, where 3 important pieces of legislation came out. You can see them on the slides. There's the EU taxonomy, which has been mentioned already today. And this gives companies a kind of dictionary to define if their activities are green or not, and for which they then have to report green revenue, green OPEX, and green CAPEX. Then there's the Corporate Sustainability Reporting Directive, which is the subject of this webinar today. And as mentioned by Julia and very clear with the explanation she gave, it's quite revolutionary in terms of ESG reporting requirements. So large companies will need to be prepared to report in a very thorough way on environmental, social, and governance matters, and all risks that might be linked to this. And then there's a Sustainable Finance Disclosure Regulation, the SFDR, that essentially focuses on financial undertakings to improve transparency in the market for sustainable investment products. And today, as mentioned, the webinar focuses on the second piece of legislation on this slide, the Corporate Sustainability Reporting Directive. And when we go to the next slide, it's interesting to see where does it come from. Julia already explained it quite well. But some companies in our audience today are already subject to sustainability reporting requirements. As mentioned, in 2014, the Non-Financial Reporting Directive was launched and transposed to EU member states in 2017. So the companies already reporting today, they need to report on certain topics which are social, employee and environmental matters, human rights, bribery, and corruption. And for each of these topics, aspects needs to be reported about policy, KPIs and their results, and the risks and how you manage the risks. But as mentioned by Julia in very much details, there were more and more voices from different parties that there was a real need for action. The scope of the NFRD was too limited. It does not meet the needs of the users. And we had a very good explanation from Julia why they didn't meet those needs. And when some information is reported, it's sometimes or even often not relevant, reliable, or easy to access. And there's just no real consensus on what to report exactly. So that's where the CSRD comes in and wants to remediate to all of these issues. And I will come back to the exact scope, but first I wanted to go through the timing, because that's really important to see that there's really quite some urgency for companies to report. So if we go to the next slide, the timing is actually different for the companies depending which size they have. Companies that report today according to the NFRD already need to report on some aspects of the EU taxonomy. So they need to, last year actually in 2022, they already need to report on the eligibility of the EU taxonomy. As of this year, it will also be on the alignment for 2 of the 6 objectives this year. Next year, it will be for all 6 environmental objectives that will be published in the near future. Then as of 2025, for fiscal year 2024, the EU companies that are in scope of the NFRD will need to report on the CSRD. And then as of 2026, all large companies, listed or unlisted, will need to report both on the CSRD and the EU taxonomy. It will be, like, as I said, in 2026 for the report published about the information of and the data of 2025. And then later on, the listed SMEs will follow, and then also the non-European undertakings who have material activities in the EU. That's quite new, actually, that also non-European companies will need to report. And we will briefly look to the difference between the NFRD and the CSRD on the next slide, mostly in scope. As mentioned before, the scope of the NFRD was only for large listed companies or other public interest entities with more than 500 employees. The scope of the CSRD becomes much broader. Actually, all large companies will need to report. And when are you a large company? According to the definition of the EU, it's when you exceed at least 2 out of the 3 criteria you see on the slide. So more than 250 employees, more than 20 million euros in total assets, or more than 40 million euros in turnover. These, I need to mention this because these are European criteria, but when the directive will be transposed, it could be possible that member states have their own thresholds. And we saw this as well in the NFRD. For example, in Belgium, the criteria for total assets and turnover was lower than what was required by the EU. For Belgium, it's 17 million in total assets and 36 million in turnover. And we could expect that member states will, again, for the CSRD, use their own thresholds. So the EU threshold will be the minimum, but it could be that it's more severe in the EU member states once it's transposed. Then next to the large European companies, also the listed SMEs will be in scope. And what's completely new, as mentioned, is that also non-EU companies will be in scope if they have a material branch or subsidiary in Europe. And when is it material, those thresholds also have been communicated. It's more than 150,000, sorry, in revenue. And this makes that the affected companies increase significantly from around 12,000 companies in scope of the NFRD to nearly 50,000 companies in scope of the CSRD, which is really a huge evolution. Now, on the next slide, this gives you, in a nutshell, what CSRD is about. And we will go through the content and requirements in detail in a bit, so I won't put too much time in this on this slide. But the most important, actually, on this slide is to keep in mind why it is important for companies. Why is it important for you to go and report on sustainability information, and not only just to be compliant with the legislation? It will really be a matter to have a more common and standardized way of reporting information, important for your stakeholders. It also will make actually non-financial information as important as financial information. So they will come to the same level. And for listed real estate companies, which are our audience today, it will enable to continue to attract capital because your investors will ask more and more questions about your sustainability activities, and it will maintain the value of your portfolio. Because at some point you will really have requirements on what kind of buildings you will be able to construct, and also when you need when you have when you want to let your companies, your buildings, sorry, these will also become requirements. On the next slide, we start to look at the content of the CSRD, because what does this mean concretely for you? What will companies need to report? Companies will need to report how their business model and strategy fits into a low carbon economy. And what does this mean is you need to say how you deal with these ambitions and how targets are set to be in line with the Paris ambitions of a maximum temperature increase of 1.5 degrees. Which targets are you going to set up to reach these? So this would mainly concern emission reductions towards the future, or even become CO2 neutral. How are you going to involve stakeholders in these plans? Which risks do you have to take into account, and how are you going to manage them? Which policies do you have to implement for this? So it's quite some list of information you will need to report. There will also be much more emphasis on governance and the responsibility of the board of directors and the management committee. So they will also need to have these capabilities to be able to control and to have an overview of this information of the company. There will also be a need to report on intangibles. This is mainly to know the difference for investors between the book value and the market value of your company. And it's no longer just about reporting on the activities of your organization itself, but also about including the entire value chain with all the suppliers included. And then there's the concept of double materiality, which becomes really important. It's a new concept. Materiality was already known in the past, but now we go to double materiality, and it's an exercise you need to perform to look on the one hand at how sustainability and matters affect you as an organization, but also on the other hand, you also evaluate how you as a company have an impact on your environment and on people in general. On the next slide, you see what this means in practice, this concept of double materiality, because it's quite abstract. But you actually need to consider a few items or aspects that you can see on the left-hand side of the slide, which is stakeholder selection and mapping. So what are your stakeholders? What information is important to them? Why are they interested in what you are reporting or what you are doing? Which topics do you need to take into account? The dynamic evolution of these topics, because over time there might be new emerging issues, so you really need to be on top of it. And also a risk analysis for each of your topics needs to be performed. It will result in identifying the impact materiality, where you investigate impacts on people or the environment in the short, medium, or long term, with the whole value chain. And this is what we call the inside-out approach. And on the other hand, it will also identify the financial materiality, which is related to potential financial effects and risks and opportunities that may impact future cash flows and your enterprise value in the short, again, in the short, medium, and long term. And this is what we call the outside-in approach. The matrix showed on the slide can be a way to represent the double materiality. It's an example where you clearly see how impact materiality and financial materiality are linked to each other, but actually companies are still free to use their own way of visualizing the double materiality for their own organization. But so it's really just an example to show you a way to do it. And now I will give the word to Reinhard, who will guide you through a few other requirements of the CSRD and how you can prepare yourself to be compliant in practice.
Thank you very much, Shurian. So we have been talking about reporting requirements, and at the end, these will be made clear within the European Sustainability Reporting Standards called ESRS. The ESRSs are, as already said, created by EPRA, and by the way, EPRA is coming together today, so they are sitting together as we have this great webinar. And basically, the ESRSs which are out and public today, they are draft, so they will change mid-November and November-ish. The new updates will normally be made publicly available. So everything which we will say in the next slides, please consider it's draft. Although it is draft, we do know what are the key topics and domains on which reporting will be required. The actual reporting KPI or the like can still shift, but the key domains we know. So it will be about environment factors, social factors, including human rights, including supply chain due diligence, and of course also governance factors. And the publication will have to happen in the management report. So we really move towards an integrated reporting format, although many of you probably already are at that stage. In view of timing, so the first set is expected mid-2023. The second set, including sector-specific standards, which might be interesting for you, of course, is mid-24. And don't forget the aspect of digital tagging the report. If we move to the next slide, this is an overview of the current ASRSs. So these are publicly available. As you can see, you have the cross-cutting standards, which are general principles, but also ASRS 2, where you have, for example, the materiality requirements, as explained by Oriane, so the double materiality. So these are cross-cutting. And then you have the specific ones on environment, social, and governance. Under environment, you have 5, under social, you have 4, and under governance, you have 2. So these are publicly available. You can already consult them and reflect upon the readiness within your organization. Now, in the next slide, I will zoom in into ESRS E1. So if you look up ESRS E1, so this is only one of the 5 environmental ESRSs. So we've taken this as an example. You see what is under this ESRS in view of climate change. So it is reporting on your transition plan. Again, it is draft. It's also reporting on your resilience. Again, it is draft. But basically, if you look at many of these reporting requirements, you do know what this direction it's going to head. So even though transposition to local law still is ahead in the future, if you wait with acting on these, you might get into problems in getting the compliance with the reporting requirements, because climate resilience, transition plan, so you link it with scenario analysis and the like. So you need to do these things to be able to report in line with the ESRS. It's the same with, for example, if we move to the right side of the slide, performance management. So you have reporting requirements on scope 1 and scope 2 emissions. Typically that's manageable, but scope 3 emissions is for many organizations a big challenge. So if you wait until the final moment to think about, okay, capturing scope 3 and be able to report on, you might get into problems in meeting the requirements. This is one example of one ESRS. Again, it is draft, it change, but it's to give you a bit of a flavor of what is behind those reporting standards. If we then take, for example, let's zoom in again. So we had the overview of all the ESRSs, an example of ESRS A1. Let's zoom in now on internal carbon price. That's the next slide. And basically, if you see the next slide, so this is the requirement as of today. If an internal carbon price disclosure requirement is applicable for you, then it explains what you need to disclose and the like. So if you would scan those ESRSs, that's the logic you will find. But ESRS have variable subcomponents, and then again, you have more explanation of what is behind. I'm not going to go into the details of this internal carbon pricing example because it might change. However, if this is for you one you have to report, so I'm using the word if, you already know what direction the ESRS is looking at. Then don't forget that at the end, if you move to the next slide, there is an assurance requirement. So everything which you will make publicly available, the auditor will have to provide assurance of. And that's why when you think about reporting is the final stage before the auditor can come and do the assurance on the report. But of course, before that, think about your strategy. Make it, implement it, make it operational, make sure that you have the data in place, think about the process and the controls and the like. Because the auditor, of course, he has to provide limited assurance. The goal is as well is that it will progressively move towards reasonable assurance. So the level of assurance will increase. On what will assurance be given is on the compliance. It's on the process behind it, the mark of the report, but as well on indicators related to taxonomy. including the role of the audit committee needs to be clarified within the assurance requirements. If we move then to the next slides, this is a bit to give you a feeling of, okay, we need to comply. That's one. Of course, in the process of compliance, please don't just make it a compliance tick the box exercise, because when you think about ESG at large, you will have, regardless in which industry you are, also in your industry, you will have 3, 4 of all these ESRSs and all those components. You will have 3, 4 which really matter, which really create value. So try to really go at those 3, 4, maybe 5 KPIs, focus on them, because that's where value can be created or protected, and go beyond compliance. For the other ones, typically our advice is do focus on compliance. Do what the minimum requirement is, but don't just make it a compliance exercise, because then it will quickly feel as a burden. As a first step is then, of course, are you in scope or not? Have a check in how ready you are or not. It's kind of a fit gap or a gap assessment or a readiness assessment. Think about your materiality matrix. Don't wait too long with your materiality matrix. Think about the impact materiality, but also the financial materiality, because that's where you will find very clearly where value from a financial aspect can also be created or potentially be destroyed, and hence should be the core of the ESG report. Think about the big chantiers you will have, and typically what we see as the big chantiers, it's of course everything related to carbon, scope 1, scope 2, scope 3, everything related to climate resilience, scenario analysis, so which is TCFD, everything related to supply chain intelligence. And that's setting up the management system, because you can only report thereon if you have the management system in place. By the way, this is also linked with the corporate with the supply chain due diligence directive, which is a CS3D, which is about the management system. CSRD explains you how to report thereon. The timing of both is different. So CSRD is first, and only then CS3D will become in force. And of course, keep a good eye on the EPRA developments, because more is to come. But you can only meet these requirements if you have clear governance processes. If it's embedded into your organizations, if it's embedded into your business, don't make it a separate thing. Embed it into your business. If you have your controls in place. Don't underestimate the skills and competences which are required to be able to report. And then, of course, the last one is data. Data is one of the biggest challenges we see today. The data is not always available. The data is not always within your own control. It's sometimes sitting within your value chain, upstream or downstream. So do try to grab that on time, because this is a big chantier which takes a lot of time to get ready. Because at the end, you need to report, and it needs to be robust and reliable if an auditor has to do his or her audit. Then to close our part is the next slide. So it is only the start. It is ESG reporting will become widespread within the EU, and more is to come. You will have to cover all the domains, E, S, and G. You see, depending on the sector, more focus also on the E. So definitely in your sector, the E is the one which is the key area of focus. But don't forget, there's also the S and G, of course, to focus on. It's standardization. EPRA will provide more information, and at the end, you also have your assurance requirements. And that's to conclude our part, and then I, with pleasure, give the word back to Jana.
Thank you very much, Reno and Oriane, for your presentation. I think we learned a lot of information today, and I see some of the questions that you've already answered and some that you indicated that you would like to answer. So we can now move to Q&A, and I remind the participants that you can type the questions in either chat or Q&A sections, and we will try to answer them. And if we do not have the answer today, we will try to come back to you in time with the appropriate answer. So you indicated, Reno, that you'd like to answer one question related to the EU taxonomy and its connection to the CSRD. There was a question about whether some of the European REITs are already subject to certain taxonomy reporting requirements. Would you like to respond to that, please?
Yes, correct. So companies who are today in scope of the NFRD, so if you're in scope of the NFRD, you are already in scope of the taxonomy. So these companies over their fiscal year 21 had to report on the eligibility, and over this fiscal year, so 22, they are obliged to report on alignment with taxonomy. Those who are not in scope of the NFRD yet will become in scope of the taxonomy the moment they are in scope of the CSR.
Excellent. Thank you very much. There is a question that I would like to ask as well in regards to the taxonomy and CSRD and assurance. Would you see the connections between assurance of the taxonomy disclosure and CSRD disclosure? And what can you tell us at this stage? Is it too early to have this discussion? How will it evolve?
Yeah, so in all respect, I'm an advisor. I'm not an auditor, but I will try to give an answer. So it will definitely be linked with each other, because when you're in taxonomy, you're thinking about OPEX and CAPEX. You're linking it with environmental criteria. So of course there is a one-on-one link with the CSRD information, which you will be publishing in view of the environmental aspects. And as with the taxonomy, today, you have 2 of the 6 environmental objectives. The 4 other ones are coming, but also on social and governance. So when you're assessing your turnover, OPEX and CAPEX against those technical criteria, of course, they are linked with the reporting you do there. To give you an example, which is relevant for real estate. So if you're looking into the environmental technical criteria for climate change adaptation, one of the requirements is to also do a physical climate risk assessment. As part of the CSRD, you have to report on the resilience of your business model against climate change, which basically is scenario analysis, which is physical risk and transition risks. So the physical part is already in the taxonomy. And these are examples of links we will see. And then, of course, your auditor will make those links as well.
Very interesting, indeed. Thank you. I have a question also for Julia that you marked that you would like to answer regarding the European Single Access Point and its relation to the CSRD directive.
Sorry, I always double mute. Yes, so thank you for the question. Basically, just to recap, the ESAP is still at proposal level, meaning that we have proposed it, and well, the council reached a general approach, but now it's the turn for the parliament, so it's not law yet. We don't know what will become. So I can just maybe provide an answer based on the commission proposal and what we as commission staff hope that will be, but there is no guarantee, of course. So basically in the it's composed of 3 legal acts. So we're speaking now of the part that would amend the accounting directive and be relevant for CSRD purposes. So what we're saying in this proposal is that we propose that companies that have to disclose information sustainability reporting under the CSRD, so only those one in the scope of Article 19A and 29A, also have to submit to the collection body. I don't know if I can be detailed about this proposal, and if everyone in the call is aware, but the idea is to find a way to have the information accessible in one place, one platform, all information from companies, most of the information of companies, and in a digital format, so that users can easily access from one place all the information that they would like to access. So basically, the information submitted for CSRD purposes is within the scope of the Commission proposal, meaning that we thought that it could be a good candidate for the ESAP. So it is included, and what we suggest is that it is submitted to a collection body that in this case could be an officially appointed mechanism under the Transparency Directive, if it stays as the Commission proposal, otherwise something else. And through that collection body, the information will pass onto the ESAP platform and be accessible. And what we have proposed is that until there is a specific requirement for machine readability, so a very high level of digitalization, a simple data extractable format is sufficient for the submission. And by data extractable format, we also mean PDFs, for instance. Of course, based on the CSRD, it will not be, it will be XHTML, so it's changing as it goes. Let's see what will happen with negotiations. We don't know yet the position of the Parliament. We'll see, but one thing that I would like to underline is that the ESAP proposal also encourages entities, companies, to submit voluntary information and to have it available as well. And this could be very much relevant when we speak of CSRD and the use on a voluntary basis of ESRS standards for SMEs, for instance, by SMEs that are not listed, that do not fall under the scope, but could be interested in gaining visibility and be, say, a part of this of the scope, although they're not required to do so.
Understood, Julia, thank you. And it would basically mean that in the same platform, we would see financial and sustainability information for the same company, right, next to each other?
Yes, that would be the idea, but it's early stages, so we don't know what will become. But based on the Commission proposal, yes, the idea is to have really everything in one place, because right now information is everywhere and it's not efficient in our view. So.
Okay, excellent. Thank you very much. I also have one more question for you, because you mentioned the connection to the Transparency Directive and the way CSRD amend the scope to certain companies, actually, to those that are listed, all of those that are listed through Transparency Directive. Does it mean that those companies will also be subject to EU taxonomy as well? But would you happen to know at this moment?
I am not in the team dealing with that specifically, so I'm a bit hesitant in giving answers on the spot if I'm not 100% competent. But well, what the CSRD says is that, well, the amendment to the Transparency Directive works in the sense that it says, it says that it's the internal chat. We have under the Transparency Directive, we attract all the sustainability reporting requirements for 19A and 29A.
Okay.
And if I'm not mistaken, it is mentioned in those articles a reference to the taxonomy regulation. But I will stop here because I really don't want to confuse the audience. So maybe I will double check and we can reply in writing if possible.
Thank you. That would be fantastic. For now, we understand that it's likely, but let's verify. with the Commission. That would be very useful information for our members as well. A lot of large European, not European, and also outside of European property companies are listed and have dual listing in European stock exchanges. So we just want to make sure that we know that they are impacted and to what extent. So that would be very useful. I see a question from Sander, and I'm happy, Sander, to answer the first part of the question rather quickly. There is an annual report which EPRA sustainability team produce on the specific performance measures, and it indicates how much and which KPIs are reported to what extent. It's published on the website, and I'm happy to share with you later after the webinar the report, so you can screen that. Regarding the real estate valuations, I think that for that part we will need to have a separate meetings and discussions to explore together with you how this would have specific impact on the valuations. That's all what I can do at this moment. And I saw Julia raising the hand briefly.
No, it was a mistake, sorry.
Okay, very good. So I don't see any other questions, but I want to invite the speakers to have a comment. If you feel like you want to share and comment and add something on anything that was discussed, please do so now.
Yeah, I would say, first of all, thank you for giving us the floor. And then if I can give one takeaway is it looks a lot, don't be scared. Try to identify the one thing, so the few things that really can create value out of this, and focus that on and embed it into your existing business operations. Don't make it something separate. By doing so, it will feel less as a burden, but also, to be honest, some parts will be a burden. So I also need to say that, but try to avoid that and try to find the positive energy and the value you can get out of it.
Agreed. Thank you very much. I'm going to move now to the launch of the tool. Please stay if you can. I think it would be also interesting. But this is EPRA tool dedicated to the CSRD, and I'm very glad that highlighted the compliance process, and it starts with identification of whether you are within the scope and whether you are not. And with that information, then you can do the planning and prepare very well in time that you can have considering the CSRD requirements. So at this moment, we are very pleased to launch the CSRD tool, and it's a practical tool that will help you to determine whether you're in scope and when you will fall under the scope. We know now that all listed European companies will be in time in scope, and depending on the size, it's going to be earlier or later. So the rules are rather complex. The situations are very specific, depending on many aspects, and the legislation also will apply to third country companies, whether they are themselves listed or through subsidiaries, like what you could hear already in both of the presentations. So I invite you to use this tool. It was developed for you to support you. Our mission, is to represent and help develop the listed sector in Europe. So we do many tools like that in the support for you, and there is a QR code which will navigate you to the tool. There is also a separate link that will navigate you to the tool, and I created a case study. It's a simulated case study. All the informations are fake in a sense, including the name of the company, to just help you, to show you how the tool works, to navigate through the questions and so that you would have an understanding. So in our example, we have Toronto Prime, which is a listed property company which was formed outside of the EU, in fact in Canada. It's listed in a New York Stock Exchange, and it has dual listing. It's listed also in London Stock Exchange, but both listings are outside of Europe. Toronto Prime generates a consolidated net turnover of 180 million euros in Union for the last 2 years. And it's holding EU subsidiary listed in Euronext. And this subsidiary is not exceeding 20 millions of euros on balance sheets, and also not exceeding 40 millions in net turnover. And it's also not included into in the sustainability report of the parent company. And with this information, I will now show you how the tool works, and also I will show you where you can find it on the EPRA website if those links will not work well for you. So you can go under Public Affairs to the CSRD tool section. You just click on it and it will navigate you to the online tool. And in here, it will guide you through various sections. Depending on your answer, it will navigate you to the right assessment. I will click continue. I have my contact details. You'll need to put in your contact details to be able to continue further. So our Toronto Prime is company which is governed by Canadian law. So it's a no here. It's a company not established in the union, and it doesn't have securities on the regulated markets within the union. So it's okay, again, no. It's a parent company which was formed outside of the EU, and it generates consolidated net turnover of more than 150 million within the union for the last consecutive financial years. It will be yes here because our Toronto Prime has 180 million within the union for the past 2 years, and it holds EU subsidiary undertaking, so it will be a yes here. And the subsidiary is listed on Euronext, so it will be yes here again. And here the question is whether it meets criteria for large companies. We can select specific options to your specific case. In our case, it has none of the above, in fact, for the subsidiary. And we will go to another size requirements for SMEs. And here it will have all of those. And the final question will be if the subsidiary is part of the subsidiary report of the parent. And the question is, the answer here in our specific simulated case is a no. And with this question, it will guide us to the assessment, the report, which will be very brief, and it will give you indication on whether you are in the scope of the current non-financial reporting directive, whether you will be in scope of the CSRD directive, and the same then application to the EU taxonomy, and if so, when it will start applying to your company. In our case, it will start on January 2028 for the first countries companies which are not directly, which themselves are not listed. And this is what we prepared for you. So please feel free to use it in your assessment. If you have any questions, you can always contact us regarding this. And if you would like a specific report, of course, you can let us know and we will generate it for you for your own purpose. I will now move back to the slides because this was the launch of the CSRD tool, and I will just check if there are any questions. I don't see any questions. Maybe not yet, maybe they will come later. I will move to the next steps on the EPRA side after the webinar regarding the CSRD regulation. And I just want to highlight that there other tools which we are developing and which are developed in the EPRA sustainability department to support and can the memberships and can be used also for the CSRD application. One of the tools is regarding the CREM tool, which is helping to navigate and to manage your net zero targets with the CREM guidelines. EPRA produced together with CREM a report which is on the website, and you can find it, or we will send you if you let us know that you would be interested. There was also a webinar and the recording is available upon registration, so please do use those tools, especially CREM could be potentially used as part of the CSRD requirement to disclose information about your own pathways towards climate neutrality and specific targets on that transition. So it's potentially a good tool in this regard as well. EPRA also issued a guide on the EU taxonomy on alignment for listed real estate. These guidelines are published on the website, and also there was a taxonomy webinar which Tobias mentioned at the very beginning. So you're welcome to register if you haven't and see the recordings. The SFDR webinar is on 16th of November, and the QR code will navigate you to the registration link. If you are interested to join, please do so. And on the materiality metrics, which Renata mentioned as one of the tasks to develop, EPRA SBPR can help on that aspect as well. It has done so for 11 years now, and EPRA sustainability team is also looking to update it when there will be a clarity and final information about all standards which would be relevant and mandatory to apply, so that this tool will be updated in due time. And with that, I think our webinar is nearing the end, and I maybe invite Tobias if he wants to say a few words. And I thank you very much to everyone for your attention and to speakers for your contribution. It's very valuable. Thank you.
Indeed. Also a big thank you from my end for joining to everybody. I think we had around 100 people joining, which is a very solid number. Also a great thank you to all the panelists. The raised questions in the Q&A, I think they have been covered mostly already. We will follow up with the ones that are still dropping in and haven't been answered so far. Jana highlighted already the upcoming webinar as part of the triangle EPRA has been covering with regards to the sustainable finance webinars on the 16th. You can still find that one plus other events from EPRA on our website, epra.com, and then you go to the events button. And if you have any other questions regarding the tool or regarding the general policy work we are doing, please drop us an email, publicaffairs@epra.com. And with that, thank you again. And yeah, looking forward to meet you at one of our other webinars. Thank you very much, everybody.
Thank you. Bye.